Cost is very important. We managed it down from over 21 billion to below 17 billion over the last 4 or 5 years. And you're right, costs were 2% up in the second quarter, but for the first half they're down 2%. So we have to continue to focus on cost discipline, and our target for the full year is to be between 16 and 16.5 billion in terms of costs. So we feel reasonably comfortable that we can maintain that discipline.
And obviously you've taken this step here to create the global investment bank that brings together some of those businesses that were unwound under Tidjane Thiam. Can I ask you why specifically you're doing that? Will that allow you to push through even further cost reductions while maintaining the same level of operating efficiency?
Well, when the restructuring happened in the years 15, 16, 17, we had to separate the trading business from IBCM at the time because we had to de-risk the trading business, and we wanted to kind of protect the IBCM M&A capital markets business. But bringing them together was something we already discussed a year ago. So it was something that was planned at some point, and now is the right time to do that. I have not met one single person within the firm who's against that move. It was a natural, obvious next step to do. This is less about cost, but there are some cost benefit, but it's really about improving the collaboration, for example, in the underwriting capital markets business where we had a 50-50 joint venture. It makes things more complicated. So, or equities, we want to have a global equities business. So it's really something that was a natural next step.
Obviously, there have been some missteps in recent years. I don't want to dwell on too much what Tidjane Thiam was involved in, but the markets have looked at your involvement with Luckin and Wirecard, and they've asked questions as to whether your integrity and your oversight was robust enough as you engaged with some of these businesses. Is this going to continue, or are we seeing a culture change at Credit Suisse?
Not at all. We are actually very satisfied with the compliance and risk procedures in overall, and I'm not going to comment on individual cases, but we are number one in IPOs globally in the first 6 months. If you do a lot of transactions, sometimes that's part of the business. So we have not combined risk and compliance because there was any shortcomings in terms of those second line of defense operations, but it was because we were at a point where effectiveness, especially non-financial risk, be they anti-money laundering risk, reputational risk, cyber risks, etc., where we can be more effective by doing that. Also technology, we had a technology team in compliance, we had a technology team in risk. And if you look at our cost base in the last 5 years for the combined risk and compliance function, we went from 700 million to 1.3 billion. So this is really about being more effective, being more efficient, and working seamlessly together between those two functions.